Greetings everyone, JJ here from SchoolOfTrade.com, April 12th, 2010. Here's your live trading recap. Hope you guys had a good time in the room this morning. We took a number of different trades. Had a pretty tough environment this morning though. Before we take a look at the trades we took today, I want to remind you guys of those three important links. If you're watching this video right now on the YouTube page, in the upper right hand corner above the video, you'll see three important links. One for our 12-month track record, one is for our 3-week trial, and the other takes you right to our blog. We just added a brand new video on NinjaTrader's 6.5 working with Windows 7. Want to make sure you guys check that video as well. Let's see how we did today. 2, 4, 6 total trades. You can see kind of a mixture here between winners and losers. Well, we didn't take a loss until the last trade of the morning. It was a very small loss, as you can see. We put 28 ticks, 280 in the pocket this morning. Now we're coming out of a pretty challenging environment at the beginning of this month, and we're starting to see some real good signs of improvement here, guys. So I wouldn't be surprised if this starts turning around here and producing some pretty remarkable results. As you guys know, the end of the first quarter is pretty slow. Then we get into the springtime here, and we start seeing things really pick up speed. So make sure you guys come back and join us. We'll keep you guys posted. But we got about $3,500 for the month so far. $280 for the week so far here. We'll keep you guys posted with 28 ticks today. What's the most important thing that happened today? Well, of course, Mondays are slow, right? The same reason why we don't like getting out of bed on a Monday morning is the same reason why most traders don't either. So Mondays are expected to be slow. I finally have my brand new computer up and running now. Got those dual processors with the Windows XP and the Windows 7 64-bit running dual now. So I'm on my XP right now for new charts. So I'm a very happy trader this morning on this new computer, finally working properly. And of course, we didn't have any news today. There was very little news today, so we had to really be careful to watch for volume. Without any news, we expect the markets to kind of sit there until something comes along and pushes it to get started today. So we watch the volume without any big news today. Watch the dollar index futures. That will tell the story for the future. And then don't forget, watch the first move of the day. That will tell us that possible story for the future as well. Let's look at the dollar. Now here's an example of the dollar index. Now you've got the dollar index here on the left, and then you've got your crude on the right. Now two things here about this snapshot here. I'm going to first start with the dollar index here. So dollar index, the DX on your left, the crude here is on your right. All right, now a couple things here before we get started. First things first, look at this big drop in the dollar. Chances are, because of the issue in Greece right now over the weekend, this big drop in the dollar after that big bailout. We also saw the euro begin to spike, right? So the euro began to spike, right? The dollar begins to drop. There's a negative correlation between the dollar and the rest of our markets. So the dollar dropping, we expect to see everything else rising. However, that's not the point here. The point of this example was, look at the price action. Now, forget about that big, strong drop there early this morning. If you just came in this morning here, and all you saw was this, right? What would we think? We would think, be careful out there, right? So don't get fooled by this big, right? This big drop here, because that big drop, of course, happened on some sort of fundamental changes over the weekend. Now we have to do is we have to look at how's the market trading right now, right? What's the condition of the market right now? So it's going sideways. So we see double tops, double bottoms, and as you guys know, sideways markets on the dollar. You better believe it. Look at this crude here, right? Now, of course, with that, right, big drop in the dollar. As you can see, get a little bit of a run up here on crude, and then it just hangs out, goes sideways on us. Okay, so one thing we definitely know is when you see the dollar index go sideways, we got to be very careful because the crude oil, the gold, the euro, the pound, everything else expected to go sideways as well. Negative correlation, but the easiest way to tell is when you have that dollar index going sideways. That tells us to be very careful about trading there. Okay, so watch out for the dollar. Dollar was pretty sideways here, which meant we had to be pretty careful here for the rest of the morning here. Let's keep moving. Now, next up, I want to show you guys an example here on crude oil and the pace of tape. The pace of a tape indicator is a very simple indicator, of course. It's a proprietary indicator to our School of Trade members, and it measures the speed of the tape. Now, we use the speed of the tape as a sentiment tool. All right, now real quick. As speed rises, it's going to confirm the move. Right? As speed falls, it's going to, right, negate the move. Now, one of the most common divergencies that we see will be when price decides to rise, price rises, and the speed falls. What that tells me is this price is probably going to end up reversing, coming back to the downside here. Let's take a look at this on the chart. Now, again, here's the pace of a tape indicator down bottom here. Focus real quick, though, on the two extremes, right? Both the big green sides here, two extremes. And then in the middle, you see this very slow, right? Almost like it's falling asleep. Well, great example here of where we saw The green correlates to the break to the downside, 2 steps short. The red correlates to the price moving to the upside. And then the second green here at 952 correlates to the drop to the downside again. How does the speed work? How can we use this to identify what the short-term sentiment is? Well, starting first, while we're dropping here at 945, we have fast speed. We then, rather than continuing back down through this 85.10, we bounce off it and we head back to the upside. During that bounce, what do we see? Slow red pace of the tape, slow speed. Then we start coming back down again, we make new lower lows, and what do we see? Green pace of tape again. Great example here, how the speed confirms the move. We knew not to be worried about the buy side here, because the buy side we saw red pace of the tape. As price began to rise off that 85.10, we see red pace of the tape. We stayed focused on the short side, and that actually helped us out here, guys, on the first couple trades of the morning here. So watch the pace of a tape and use that to identify short-term market sentiment. It's one of the easiest ways to do it. Now, another thing we looked at today is we also looked at the average to range. Now, here's an example of 3 different markets and how we can use the average to range. As you guys know, there are 2 ways to effectively use the average to range. Right? The first way is getting inside of our sweet spot. Right? The sweet spot is going to be from 0.15 up to 0.20. Okay, that's the sweet spot. But the second and more consistent way of using it is going to be looking for a comparison. Right? So you will compare now where it is now to where it was before. Okay, so let's look at the crude. So this is the euro, excuse me. And we'll look at the ATR here in the euro. Now you can see here in the euro, we have this, what appears to be a sideways range here on the ATR. Now this makes it more difficult for us because you can see here we're not breaking to the upside, we're not breaking to the downside. One of the easiest ways to use average to range is comparing it. Where am I right now? For example, right now on this average to range, we're at about 561. But of course, 15 minutes before that, we were down here at 0.004. Where did it go? It went up. So the range was widening. Now this is an example of a very indecisive price action. Really has no idea where it wants to go. Let's look at the next one though, because the next one here you'll see is a little bit more interesting. Now this one here on crude, this is exactly what we look for here using ATR. And ultimately what we have here is you can see ATR begins to drop, right? Begins to drop. We mark up our low here and we break below that low. That basically tells us to be very careful out there because whatever price action was there is now getting narrower and narrower and the range gets tighter. So we're using the ATR here, right? The average to range. Mark up that low here, right? See that low? Mark up that low right there and wait for the ATR to break below that low. Then you know to be careful, right? Let's keep moving. Next up. This is the gold now. Now this is another great example here using ATR once again. Now in this case, look, we marked up our highs here. And then we wedged in the lows by drawing a trend line from the lows. Another great example. If this thing breaks to the upside now, we should be looking better because it will start widening out. If it breaks the downside here, guess what? We want to be careful now because things are going to start tightening up, right? Range will start tightening up. So don't be afraid to use more resourceful, creative ways of using that ATR, guys. And again, we'll go over this every day in the live trade room. So come out and join us anytime you guys want. We'll give you guys a 3-week trial to get started.